Good morning, traders. Steve Ganz here, and it is Monday, August 12th, and I'm just entering a bear call spread. So why am I doing that? What's my premise behind it? How am I going to manage it? Now keep in mind, anything I share here is always designed to be paper trading for people to learn from. But let me just show you my process on this, my thought process, and why I'm doing what I'm doing. So if I take a look at a chart of NVDA, we can see that these are daily bars. NVIDIA has been in a steady downtrend, making lower highs and lower lows. So pretty consistent downtrend. Now, my thinking is that this trend might continue. NVIDIA has pulled up here close to this downtrend line today. So if I think we're going to continue down, a logical thing to do might be to sell a call, and then I'm going to buy a further away call to turn this into a spread so that I don't have the full risk of just short calls in case NVIDIA does rip up. So that puts me in a position that looks like this, where if NVIDIA does rocket up, gaps up massively, okay, I have defined my risk. This is a defined risk trade. If I did not have this long call up here, if I go ahead and exclude that, I have now unlimited risk to the upside. So if NVIDIA shot up hugely, this could really ding the heck out of me. So anytime someone is learning specifically, I always recommend doing defined risk trades. And again, so I'm going to share the link to this trade in the notes below as well so that you can click that button. You can copy this for yourself. But again, here's my premise. So I'm going to enter this trade right here. I'm going to go ahead, I'm going to save the trade and NVDA Bear Call Spread. And this is part of the start to finish series. And I'm just going to put the reason for this is it rallied to downtrend line. So that's why I'm looking to do this. I'm going to go ahead and copy that link. But let's go back for a second and look at my chart. So in my chart here, I've put some different lines in here. I put 112.50. So if this rallies above 112.50, that will exceed the high of the day today. That will exceed my downtrend line. Specifically, if it closes above 112.50, I'm going to take a stop. I'm going to stop out of this trade. Well, if we get up to 112.50, that means that I could be down around $200 or so, maybe a little more, $250 in this trade. So that will be my stop point though. So now that doesn't mean that NVIDIA can't gap up 15 points or whatever and you come in tomorrow morning, it's up here. We can't control that as traders. But during the day, if this thing rallies up to 112.50, looks like it's going to close in that 112.50 range, I'll go ahead, shut this trade down, take my stop. Now, on the flip side of this, I've got a mark here at 104.50. If NVIDIA sells off to 104.50, that's a likely area that it might start to stall a little bit and maybe rebound. So if that happens, I want to take off a little bit of this trade there. I want to go ahead. I personally have 5 of these on. I'd probably go ahead, close out 2 of them at what I'm calling profit 1. And then I've got another mark down here right at 100. If NVIDIA were to get down to 100, I'm going to be taking another 2 off at profit 2. The last one, I'll make the decision at that time as to how weak or strong the market looks, how weak or strong NVIDIA looks, etc. But the key to this trade from my perspective is my stop here is fairly tight at about 3 points away. My downside, my potential profit if NVIDIA were to go down, this first one here is about $5 away, and then the second one is $9, almost $10 away. So I have potential reward here of, if I average those two together, maybe $7 or $8, maybe even $9 of potential reward. I've got $3 of risk. Ideally, if I'm doing a directional trade, I like to have a reward to risk ratio that's 1 to 3, or in this case 3 to 9. So that's why it kind of meets my criteria. And at that point, I don't need to win 50% of these trades if I'm controlling my stop tightly and I'm hitting targets. I mean, if I only win 40% of these trades or 30% of these trades, I can still be profitable trading this methodology. So that's why I'm entering this trade here, when and where I did. That's how I plan to manage this trade in these different scenarios. And I should also say that NVIDIA has earnings coming up. The earnings were out on the 28th. The strikes that I'm trading are the 23rd. I don't really want to get messed into having this or holding this or have the activity that might be involved in this going into earnings. So that's why these particular strikes expire before NVIDIA earnings are announced. So earnings theoretically shouldn't really be a factor in this particular trade. So that's it for now, and this is just a directional, a fairly simple bear call spread. Take care, everyone. As always, I should suggest or should ask, if you like this content, please make sure that you like and subscribe. Give me a thumbs up, give me a comment. If there's something different you'd like to see, let me know that as well. I'm building a list of different content that I'll be producing here. And I guess that's it. So thanks so much, everyone. Take care.